Oh boy, oh boy, oh boy. Here we go again. Back to work tonight, guys. Tuesday evening. Getting ready for Wednesday's trading session. Got a bunch of great trades setting up for Wednesday. Not to worry. I'm going to cover all my favorite trades in tonight's video. Then we get a game plan to make some money on CPI Hump Day, Wednesday's trading session. As always, got a lot we're going to cover here tonight. Before we jump in and get this party going tonight, make sure you subscribe so you don't miss tomorrow night's video. And as always, if you guys enjoyed this video tonight, hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro. Let's get ready for CPI Wednesday. Boy, oh boy, got a big news event coming tomorrow. It seems the whole world right now is waiting to hear how bad our inflation is out of control here in the U.S. As you can see, everything's pretty bearish right now, right? Everything's pretty bearish. Bearish in the Nasdaq, bearish on the S&P, and pretty bearish, right? $8 move down here on the crude oil. You know, we're looking for pullbacks. You know, we're definitely seeing some pretty strong moves down here, and of course, strong moves down definitely mean we're looking for pullbacks. But I'll tell you though, there's a bunch of ranges above us. You get ranges above us, so I would love to get some reversals off of these lows as well. I think, and you'll see tonight, I think there's a way to play both sides. I think there's options for reversals going back up and then shorten it back down. So I'm not to worry. I'm gonna make sure we cover all the bases. That way you have an easy roadmap to follow to make some money on Wednesday. Speaking of Wednesday though, before we jump into each individual chart and talk about these trades tonight, let me just make sure we're on the same page for tomorrow, because again, we do have what could be one of the biggest news reports, obviously, of the week, but could be for the month of July. Now, remember, we mentioned this last night, and it continued today. The White House, pretty much every kind of news organization has been circulating these publications out of the White House the last 24 hours, where they're almost like kind of front running this CPI report, basically telling us that it's bad data, it uses old data, and so I don't know. This could be a pretty exciting CPI report tomorrow if the White House is going that far in advance to kind of desensitize us to this. We're already at 40-year record-breaking inflation, and so obviously this is the big news for tomorrow. Now, keep in mind, my job tonight is a little bit difficult tonight because, as you can imagine, you can assume a lot of people overnight are waiting to see what's happening tomorrow. So markets may be a bit grindy, jumpy, here overnight, and then obviously there's a bomb going off tomorrow in the markets, potentially at 8:30 Eastern time tomorrow. So remember, we are not trading the news tomorrow. We're going to let the news come out, wait for the whipsaw to calm down, and then by 8, 10, 15 minutes later, we're back in business trading the reaction to that. That is the big news for tomorrow. Please be careful here in the overnight. If things are not moving consistently, remember, trading is a lot like riding a bicycle. It's easier when it's moving. So please, use common sense overnight. We know the markets could easily stall out overnight waiting for that CPI report. And be careful tomorrow after the 8:30, after that number comes out tomorrow. We'll wait and see how the reaction looks, and we'll trade the reaction tomorrow morning. And if you don't know what good price action looks like or doesn't look like, not to worry. I'll make sure to keep you guys on the right side of this stuff tomorrow at the opening bell. Also, too, don't forget, I know it's kind of a backseat to the CPI report, but the beige book. The markets have been obsessed with the Fed lately, and of course, the Fed is obsessed with jobs and inflation. So we'll definitely be looking for kind of an afternoon surprise tomorrow afternoon. Beige book, keep that on your radar. So those are definitely the two most important events here for tomorrow. 8:30. Careful again around that number. Looking forward to having a good day with you guys tomorrow in the trade room after we get that number coming out. And again, my job tonight's a little bit tricky because you have to kind of expect here there could be a little bit of pre-positioning ahead of it, and we may see a pretty volatile reaction tomorrow, and we may have to make some on-the-fly adjustments tomorrow in our trade room. Back to our charts though here. Now guys, whether you trade one of these markets or you trade all of these markets, make sure you watch all the way to the end because you're going to learn something new throughout the entire video here tonight. I'll provide different trade ideas, different advanced setups as we go deeper into this video, and I like to save the best stuff all the way to the end, so I'll give you a reason, stick around and watch all the way to the end. All right, let's jump right in though first to NASDAQ. The NASDAQ here tonight, we'll go NASDAQ, S&P, and then over on the crude oil. First of all the time frames on this are tick charts, and you can see the exact time frames in the upper left-hand corner. A 4,000 tick chart here, here on the Nasdaq, and you'll see they'll be different with each market because each market is a different volume and different personality here. There are two really big important clues on this chart right now that really kind of lead me to know or anticipate where the best trades could be for tomorrow. The first thing is this range. There's a big juicy range, pretty much a triangle, kind of right in the middle of that chart here. 11,900. Ranges are magnets, and so what we want to do is we want to find levels of support below the range, find levels of resistance above the range, and ultimately it's buy low and sell high. And the markets, what you want to remember is they love to rotate. So the amount we go above the range is oftentimes the amount we go below the range. And so markets love to kind of rotate back and forth, right, around the edges of those trading ranges. Buying low, selling high, using that range as a magnet. That's one big clue. Second big clue, which is a very important clue, is that strong move down. This is a very strong move going recently, right? That recent move is pretty strong. Why is that important? Well, first of all, it tells us that anytime we see a strong move in one direction, we have to respect the momentum of the bears and anticipate the bears are going to come in and they're going to want to retest that low. At that point now, do we bounce and go back higher? Do we break through and go lower? Because there is another range down there at 11,500. If we do end up getting that breakout, going lower here, keep an eye on that 11,500, that next big range going lower here. So combine these two things together, right? We get a range in the middle. So we definitely like the idea of buying it back up into that trading range, of course, but there's a challenge. We have a lot of momentum here right now. With that momentum, it's not difficult to think that as the price goes up, the bears could come down, settle it back down from there, right? So we have to kind of be careful with this, not to mention, right, we may end up kind of grinding down. Again, there's news tomorrow, so we may not get that reversal that we'd like to get off of this low here. What do the buyers want to do? What do the sellers want to do right now? The buyers want a reversal, right? The buyers would love to kind of trap in some of these bears for a reversal. The buyers would also love a double bottom reversal, one of the kind of the safer ways to trade a move like that. How about the sellers, right? The bears, of course, they would love to sell off the top of this channel. And of course, the bears, if we can get a breakout going lower, we can look for shorts on the pops as we go lower here. So we definitely have plenty of ways to trade this stuff here going into for tomorrow. Let's talk about the move going higher here first, because that's the one that looks a little bit more likely at this point, and then we can transition here into some breakouts going lower here. Again, most important thing right now, we're at a level of support, multiple levels of support. Right, 3 levels of support with that range above us. The challenge again is that strong move lower. So here are 2 ways to kind of catch the reversal off of this low. First way is with what I call a crown reversal pattern. Strong move down, bears will come in, they'll try once. Remember, it's a very bear market right now, so to respect those bears, looking for once, looking for twice, and the ideal scenario here is to get a trap down below that low. That trap allows me now to ultimately avoid, right, basically avoid buying into the move going higher, because again, we have that trend line coming down, that channel coming down, so I do want to try to get that trap off of that low. These are called crown reversals in our trade room. It's pretty simple, right? We let the bears try once, let them try twice, and then again, because of this kind of rotation off this high, I don't really want to buy into stops up here, because again, we anticipate more bears coming in right now. So I really want to try to get that trap entry as we try to go back up into that trading range. Another option here would be, let's say we do go higher, let's say the bears come in and now retest that low. Now, what do we always say? Mission accomplished, right? Mission accomplished. The bears have now retested. That strong move now is not as important anymore, and now I can be a whole lot more aggressive on this. In other words, I don't need that perfect crown reversal. I can now look for bears once, bears twice. We use this 2-try rule to kind of trap in those bears, right? Not a great place to be selling at support below a trading range. As we talked about last night on last night's video, I need to have 3 things for a reversal, right? A major turning point, signs of exhaustion, and then I got to have that catalyst. The catalyst here is all the stops, right? All the bears now that pile into that move here, all those stops are a sitting duck here at this point now. And I can literally draw a trend line off that low, buy off that trend line. I can find a trap for even better, right? Off that trap, or I can simply wait for those stops to get hit. Now remember, when you get that stop run at this point now think about that new channel coming over, draw a new trend line off that high, bring it off that low, and then think about now where that first test off the low of that channel is. Okay, think about kind of how this thing plays out, right? So bears come in, they do their job, they retest that low, maybe even go a little bit lower. The bears come in now. These are the weak hands down here, right? This is not the smart money, right? The smart money is selling high, right? This is kind of the dumb money, right? This is the new poker player at the poker table that wants to learn, right? This is somebody who doesn't know what they're doing yet. 1 try, 2 try for the bears. Hit those stops now, run those stops, and then as the market kind of punches higher, now we look for that rotation back up where? Really, for the most part, back up to the high above that 12,000, and this is we drill down, and we really look for any of the entry patterns that we cover in, for example, the free trading course on our website. We think we cover traps, failures, and pullbacks. So one of the entry setups that I know most of you guys have taken the free trading course, you've learned the failures, you've learned the traps. And by the way, if you're one of the first folks who haven't, or one of the few folks who haven't taken that free class yet and learned kind of the entry techniques I'm talking about, I'll put a little link up here for you in the upper right-hand corner. Grab that link, get registered. If you hate missing the best trades each day, if you're taking too many losses, or maybe you're looking for a good roadmap to follow to transition from, part-time trading to full-time trading, right, to quit that job, that roadmap I teach in that free trading course will get you back on track real quickly, and you'll start to finally kind of know where to anticipate the best trades each day. So grab that link. You'll love that. You'll love that free course. So those are the 2 ways we can buy this thing right now. One, of course, would be the 1, the 2, the trap, right? Or the double bottom, and then get a lot more aggressive going higher up from there. How would I sell this market? One more thing. One more thing you want to think about here too. I should mention this. We'll cover more of this a little bit later in the video. But let's say, for example, the market kind of pops up and begins to kind of grind higher here, right? These are very common these days, summertime season. If it pops up and begins to grind higher, we now kind of know where this market wants to go, right? It's disconnected off the lows. They want to retest the high. These are very easy. Simply draw a trend line across those highs, bring it down to that major low, and then think about where those prior swings are. And I always try to make sure I get underneath one of those prior swings. That will be good for a trap setup. And then we get underneath the moving average, which, by the way, is the 21 EMA, in case you guys are wondering. That 21 EMA, if I get the bears coming in to sell short now, remember, now we have a nice strong pop going higher. The odds are very good they're going to want to retest that high. I can grab that trap. I can grab that failure, take some profit off at that high, and look for that rotation back up to retest the high. That's one more kind of variation of that if we don't get one of those reversal signals coming off of that low. I liked it a lot. I got a couple more of these we'll talk about as we go deeper into this lesson here tonight. So if you want to learn more reversals, I got a couple more good ones coming in hot here later on in the lesson. How do we sell this market right now? There are really 2 things you want to think about. One is as we go higher, looking for that run back down again, right? That's definitely something to consider here, because you can see that channel coming down. And again, you could definitely look at this and say, if you look wider, there's a bigger channel up here. You could definitely justify there's a bigger channel up here. And as we saw today, the markets love to get that reversal, that pop up, and then drop it, because again, it is kind of a long-term bear trend here right now. I am a short-term trader, as you guys know, so I focus on short-term momentum. You're more than welcome to apply this stuff to a long term, but this is kind of tailored to a short-term trader's strategy. Bottom line is, if we do see this market now pop higher here, and I want to be a seller overhead, what's my concern? My concern is the range. That's the big concern here. And so we talked about that 2-try rule. This is exactly where that 2-try rule will come in handy here once again. As the market tries to rotate and run higher, we start running into some overhead resistance going through. We know the buyers want to rotate back up. So now we have to remember, we have to kind of use their exits as fuel for that move going back down again. Wait for those buyers to try once, wait now to try twice. By the way, I don't always need 2 tries, but in the situations we're in right now, they require 2 tries. A lot of times, for example, I see a real strong run higher, I'll go in and grab a 1-try failure off that moving at. We'll always have to go 2 tries. We'll talk about the difference between 1 try and 2 try in that free video class like I mentioned earlier. You'll see pretty quickly here. So the challenge is, of course, is that rotation back into that range here. Let those buyers try twice and then use those stop losses as fuel. And remember, as we get that 1-2 try failure, and all of those stops now can be used as the entry trigger or as the catalyst, if you will. As the market goes lower here now, where does it want to go? It wants to take out that low. And so remember, at this point now, we can quickly hurry up, find that new channel by drawing a trend line off that low, find that channel high by connecting off that top, and then again, grab that, as I always say, grab the first test, right, off the high of that channel. I'm obviously simplifying this right now. Could be a trap, could be a failure, could be a pullback combination. The same setups we talk about in our free trading course are what we're looking for there tomorrow. Retest of that low. And then remember, what do you think? Is it possible now at that point the bears come in 1, 2, and bam, right back up? Definitely possible. Could be a really nice little sequence we get tomorrow, either probably after that CPI report comes out. Now, what do we do if the market goes lower here right now? How do we trade this if it goes lower? Well, one option may be it may roll over and start going lower here overnight. If that's the case, it's a pretty easy job now. We're going to simply mark up that trend line off that low. We're going to find that kind of hidden channel up off those highs. We're going to look left. We're going to find some prior swings and try to get up above some prior swings. Most importantly, get above that moving average, get those buyers to come in and try to buy that pullback. At this point now, we are even more bearish with even more momentum now with buyers coming in trying to buy that pullback. I get the idea behind it, but momentum is simply too strong on that. Buyers will come in, try to buy it. We know exactly where their stops are. We've got traps, failure off the moving average, and then as we go lower, don't be afraid to grab that first pullback off the EMA from there. Now, where do we think this sequence might go, right? Kind of pops down, grinds down, find that trap, that failure, that pullback. Where do we think this market may want to go here? Again, we have this range down here at 11,500. That'll be a really easy objective. We'll know more tomorrow, obviously, once we actually see the size of that channel. So make sure you come in and join me tomorrow morning in our trade room. Another kind of breakout going lower here that you want to kind of keep on your radar here would be a 1, 2, 3 breakout going lower. So we already have that strong move down. If we saw another blast going lower here overnight, doesn't seem likely right now, but that definitely is something you want to kind of keep on your radar. Anytime we have a trading range and we take out that support below, we hold a pullback to the moving average and we blast, right? We jump off that moving average. Anytime we get something like that now, what I can do is I can simply draw a trend line off that low, find that hidden channel high, you know my style, find those prior swings and grab that trap, grab that failure off the moving average, and then look for that move back to 11,500 for that range down below. So it's pretty similar there as we go lower. We'll cover a few more variations of that on the S&P here next, but that should give us a pretty good idea, a pretty good roadmap for us here as we go. NASDAQ looking pretty good. How about some S&P, shall we? S&P, of course, is going to be very similar here to the NASDAQ, so I'll try not to repeat myself too many times here on this E-mini. There are, for the most part, two of the same clues here on the E-mini. First one is, of course, that trading range. And one very, very good clue on this trading range right now is you'll notice when they got that breakout going lower, look at where the moving average is on that low. Okay, we have a term in our trade room. It's called acceptance or rejection. And basically, I like to use the moving average as an easy way to know if I've broken out strong enough of that trading range. So right now, for example, you'll notice how the moving average is above that prior low, which again is significant because it's a major support level below a trading range, which is a magnet waiting above. The fact that this moving average is really kind of holding above that low really gives a lot of credibility now to a possible snap back higher here. Whereas if this breakdown was strong enough and it brought that moving average underneath that low, now we have to assume now the bears will try to use that level as a level of resistance, right? So this would be acceptance going through that low. Rejection would be if it stays like it is right now, where they're kind of rejecting the idea of that breakout right now. That's one very interesting part of the S&P. And you can see too, it's same thing with the Nasdaq, right? If you're curious, Nasdaq, same thing, right? Nasdaq also has that moving average a little bit below that low, right? So, and Nasdaq obviously is a little more convincing for that move, kind of going back up into that trading range. So range is a magnet. We have of course, a bit of rejection off that moving average. A very good clue there. The next clue, which same thing as the S&P, as the Nasdaq, is that strong move down. This is obviously very obvious, right? Very strong move down. Strong move down tells me we have to respect those bears. And again, we may not get that retest of that low, but it happens enough that we have to respect it. You know, we can't just kind of go guessing that it'll go run right back up again. So once again, with such a big move down here, we have to kind of trap in some of these bears to look for that reversal, or the buyers can look for, right, that bounce off that low as well. You can also see too here on the S&P, I've got that channel and I have a trend line coming down here. Okay, that will be kind of where you would think these bears may be coming in and looking for that next short back down again. So how do we buy it? How do we sell it? Not a lot is different here, unfortunately, on these two charts. Same idea, right? As we go higher, bears try once. Now, the reason why I don't want to get too aggressive by saying 1, 2, and then simply buying into stop losses here is because you would assume that as we go higher, what's going to happen? There'll be more bears coming in trying to sell into it. So that's the reason why in this situation today, and in a lot of situations where you're kind of bouncing strong off of that low, we really want to get the kind of the safest trade here, the one that will kind of be the most reliable, the most bulletproof, if you will, is that crown reversal. And again, it simply references those two tries to rope in all those bears. We know their stops are right up here, but really what I want is I want that trap. And between you, me, and the rest of YouTube, what I'll do is I'll draw a trend line off that high, bring it down to that low, and oftentimes that will all line up beautifully with a channel and a trap, or at least a double bottom. You know, sometimes we see a double bottom off that low. The key is that when you are, this is the easy way to think about it, if you are anticipating that bears are waiting up here, right? If you're anticipating bears are waiting up here, you just want to make sure that you're buying off support, not buying into resistance, right? It's an easy way to think about it. A lot of us, I don't think that way anymore. It's 101 stuff. It's very basic stuff, right? Buy at support. But you'll notice though, if I buy way up here, I'm not buying at support, am I? No. I can do that down here where I'm not worried about bears coming in, but I can be careful doing it up here. Right? Does that make sense? How about a hell yeah in the comment section? It'll be the last night, right? That's a really, really important part of this, right? So trying to buy at support on the way back in, right? Okay. Or if we do end up getting the bears coming in and running this thing back down, again, same idea here, right? Same idea. Look for those bears now. Now, see, here's the difference now. Now the bears are already in. You know what I'm saying? The bears are already in now. Okay. There's a lot fewer bullets up there now to fire back down again. And now also too, now I'm much lower. So now I can get more aggressive on this, especially if they can retest that low. Then that strong move, mission accomplished. Now it's just wrapping some bears. Let's rope in some bears. The weak hands, right? The 1, the 2, run those stops. And then as we're going higher here, again, I can be a little more aggressive here. Why? Why right there? Why can I be more aggressive there? Because where do you think more bears are coming in? They're coming up here, right? This is where more bears will come. Right? Because why? Because bears want to sell. They want to sell high. And they're not going to sell. I mean, again, these are the weak hands down here. So once they retest that low, I can be a lot more aggressive with this. I don't need that trap. It'd be great. Don't get me wrong. It'd be great. But it's not as necessary because now I know where there are more bears lingering. Which reminds me too, as the market kind of rolls higher here now, my real goal on this is to get that re-entry before we take out that high, right? That's kind of the goal on this, right? Can I get that re-entry? Again, 2-try failure pattern. You'll learn these patterns again in that free trading course. The 2-try failure. Why? Because we're so bearish, again. And of course, that roll up trap, failure pullback. I want that re-entry ideally before I get back up to retest the high. Again, because that's what we expect more bears to be coming in. Hopefully that really resonates with you because that's a big part of choosing kind of which entry pattern you want to take and which one that you want to skip. And then just as we mentioned earlier, don't be surprised here if we do get that run up, get those buyers coming in now trying to buy high, trying to buy high up here. They try once, they try twice. Now stops are a sit and duck. We already have that big move down, just begging to be retested, and we get that stop run for that move back down again, and we can look for that move again off that new channel, right? Nothing really new there, but a little more depth on this, right? On this version on the S&P. Okay, so watch that. And then remember too, right? If we start running higher here and we start to flutter, right? Kind of grind and go higher. That's your giveaway, guys and gals. That's your giveaway, right? The minute it starts to flutter higher like that, you remember, ranges love to rotate back and forth. Okay, so where do you think the market wants to go at that point? Take out that high, take out the 83 high. At this point now, we know the bears are walking away from that sell zone, and now we can mark up that high, right? Nice and tight off those highs, bring it down to that major low, find those traps, find those prior swings, and grab that first test is the best test, right? And again, I'm simplifying, and this could be a trap, it could be a failure. You want to wait for the entry setup because the setup gives you that edge. The setup is what traps in the bears, runs the stops. You'll learn about that stuff inside the free trading course. So I like those series as we go. And then again, just like we mentioned in the NASDAQ too, if for some reason the bears come out here right now and they simply push this thing running lower, right? Let's say, for example, we see a trap high up here, which would be a very aggressive short for bears here. But let's say they do, right? Let's say they do take it high, they take it lower, nice strong kind of blast going lower here. This is what we start looking for. Okay, is it a pop and a grind going down? If that's the case, draw that trend line, find that channel, mark up those swings, get that first test above those prior swings, traps, failures, pullbacks as we go. Now, this is a good example. In this example, we know we have that trading range as a magnet here. Whenever we have one of these kind of pop and grind channels like this, the size of that first leg is almost always the size of that third leg. Make sense? So the initial pop leg, that kind of pop out leg, okay, then the grind leg. The pop leg, that's the first leg. This grind is the second leg, technically, and this will be the third leg right there. That'll give you the anchor, and that will tell you kind of where the final target for that will be as we go lower. So keep that on your radar as well. Let's go back, we retest that low here now. We come in, the bears come in, and they blast off that moving average. Then what? Find that channel off that low, up around that high, grab that. We call these 1, 2, 3 breakouts, right? 1, 2, 3 breakout pattern, the trap off that high or the failure off that high. All right. And again, think about, first leg, third leg are the symmetrical legs that you want to think about. So range below us is the magnet down below us, and we got a bunch open space down there at 37.47. Again, it's tough to tell ahead of time with the CPI report, because you have to think these markets have already baked in a shockingly high number here. So a lot of times in these situations where everyone is waiting for that number, a lot of times a really bad, what's seen as being a bad number comes out, and the market does the opposite of what you would think. Right? Ever heard that saying, sell the rumor, buy the news, right? That's kind of where that comes from. At this point, if sellers have already baked this thing in here right now, a really high number tomorrow, which would seem very bearish, may produce that nice reversal off of that low. How about some oil? Let's wrap things up here on the crude oil. We'll get you guys out of here for a good night's sleep and get ready for what could be a busy day tomorrow. Oil had a huge move down today. I think we're all excited for that, right? At least for our gas tanks' sake. There are three kind of big clues on this oil right now. One is the big move down today. Now, big moves down, these are a little bit tricky, but once you kind of learn the trick to them, they become pretty easy. So the whole thing about a big move down is you have to think that unless something really dramatic happens, and trust me, we live in a world right now where drama is just on steady supply these days, right? So I'm not going to say this thing can't keep going lower, but usually what happens when you see a big move in one day is we have to kind of put ourselves in the shoes of the traders in the market. Think, you know what? This will probably be seen as being a little bit too low to sell. And so I always tell my students, whenever we see a big move down, we have to anticipate a relatively deep pullback to allow sellers to sell high, right? Bears, of course, the sellers in the market, they want to sell high, just like we want to sell high. And so a big move down today tells me that we've got to be very careful looking for shallow pullbacks. Right? Shallow pullbacks are not generally as effective after a very big move down. Now, a very common question I get from my students is, how do you know how deep is deep? Like, how do you know how deep it has to go? Here's a really easy rule of thumb. Right when you start to squirm and you think, oh my goodness, maybe this is reversing. Once that little voice in your head says, oh my goodness, they're reversing it, bam, that's exactly when it's gone high enough. I have been fooled by those far too many times early in my career. And so now what I do is I literally tell myself before I trade that type of situation, I say, okay, right when this thing feels like it's reversed, right when I start to kind of think, oh shoot, maybe they're going to reverse this thing. Bingo. That's when you want to start thinking about, no. That's high enough. Now that short back down again. Okay, it's one kind of easy rule of thumb I always think of myself to kind of remind myself, don't let the reversal fool you. Now, we may also see the market go up, bounce off that low, and then get that reversal, right? Again, that's a much different story. We've talked about that a few times earlier on in this video. Next topic here, though, pop and grind channel. You can see it right here, right? Pops down, grinds down. So what do we always talk about when it comes to a pop and grind? We talk about draw that trend line nice and tight, find that channel, and what? Yeah, look left, bam, and grab that first test. Now, when you put this into context, okay, it's not just if it was just this, I wouldn't be so concerned. But it's not just that, right? It's that plus all of that, right? It's an $8 move down today, right? A little more than $8 down. It's a big move. That's a big move. The 922 contra went $10 down today. So again, it's not just a pop and grind channel. It's a pop and grind channel at the end of a already big move down already. So we'll talk more about how to deal with that here in a moment. But that is a very important clue here for us. And then one of the best parts about this chart is the wedge. You'll notice that we spent some time in a range today. We had that breakdown, and you can see the market basically went into a wedge. Now, why is that an important clue? Because there are two types of spike and go patterns, right? There's the spike and channel, which of course is a spike into a channel. That makes sense, right? There's also a spike and a wedge. Okay, these are kind of the two that you want to kind of think about. Both of these tell us one very important factor. The first pullback, right? The first kind of pullback after it, along with kind of the base of that channel, that's where we usually get some of the best entries. So again, this happens to be a spike in wedge. It could be a spike in channel. It's kind of the same idea, right? Kind of the same idea. And a lot of times, this is kind of where I discovered that pop and grind channel, right? Kind of figure out where that channel is, right? Kind of find those pop and grind. Anyways, so spike in channel, spike in wedge. If you look at kind of where this is tonight, you can see there's your spike down. We start rolling through it. So when I look at this, I go, okay, I have a level right here. But when I put this into context here today of that big move down, all of a sudden this area up here at 98.50 looks really, really good. In all reality, you probably could justify it all the way back up to that 99.18. Markets love to do this, by the way. They'll break down into a range, they'll break out and come back and use kind of those levels before that range as kind of like, okay, almost like a mulligan, right? Give me back in again there. So this is a really, I think, a really cool chart tonight. A lot of moving pieces to it that all really kind of, make a lot of sense here if you know kind of the sequence to it. So how do we buy it? How do we sell it? We got to focus on selling it first, right? So here's a couple things you want to think about. First of all, the two-try rule. The two-try rule is going to be the king or the queen for this here for tomorrow. Why do I say that? Well, first of all, I like the idea of selling off the top of this channel. What I don't like, though, is it being such a relatively shallow pullback. So how do we avoid selling too low? We use a trap, and it's exactly where you look for the 1, the 2, and that trap. Okay, whenever I see a big move in one direction, I always think I'm looking for a shallow pullback trap, right, off that high. Why trap? Why trap? Because again, if I sell down here, right, if I sell into stops, my risk-reward ratio is shot now. My risk is up here. My reward is down here. We talked about this last night, right? Okay, so we know that that's not a good idea. The trap on this is where you want to get the entry, on a shallow pullback. Okay, on a shallow pullback. Now, as we go higher, this is again where if we do get that nice deep pullback here now, we're in a great spot for a short. But anytime we have a small amount of risk for a big amount of reward, it always tells you momentum's a problem. I'm not sure if you've learned this, yet in your trading career yet, but we're always playing a trade-off of risk reward and momentum. Risk reward and momentum they're kind of two sides, kind of each side is a coin, right? You can get a great risk reward, but the cost of that is momentum, right? You can get some great momentum, but the cost of that is what? Risk reward. Make sense? So you're always kind of battling those balances, right? They're necessary evils. So the reason I say this is because as the market now pulls back and we start going, oh, shoot, maybe it is reversing, right? Once it to feel like that reversal, that's exactly when you want to come in. And because we now have so much momentum now for the bulls, we want to trap those buyers in. Okay, we want to anticipate now that buyers are going to put up a much bigger fight at this point than they would down here. Okay, at this point now the buyers will come in. And this is really where these are always one of my favorite trades because, again, we stay patient, let those buyers come in, let them kind of dig their own grave, if you will. Think about where those stops are and just punch it right into those stops. And then as we go lower, the market now will kind of be in a free fall sometimes. We know where it wants to go, right? Because anytime we see a strong move in one direction, we know they want to go back and retest that low here. So now we go out, we draw that new trend line, we find that new channel, we look left, and we grab that first test trap, that first test failure, whichever of the entry patterns that we get. This is potential to be one of the best trades here for tomorrow, right? That pop up off that low. So shallow pullback trap, deep pullback, two-try failure. Now, keep in mind, if for some reason we get that pullback and now the market begins to grind and grind and grind and grind. These are usually pretty good giveaways that whatever sent this market lower today has, for whatever reason, bye-bye, disappeared. We get the $100 a barrel overhead, the granddaddy of big round numbers, acting now as the magnet on top of that trading range. And again, draw that trend line nice and tight, bring it up off of that low, and then grab those first tests, right? That trap, that failure, and back up from there. Think about that first leg and that third leg. Okay, makes sense on that? So again, once it starts to kind of pop up and grind, right? And it may be even higher. It may pop up and grind higher here, grind higher. Great, find that high, find that low, get ready for, right? Get ready for that first pullback for that move going there. One other option, which is the more difficult one for the reversal here. Let's say we go up, we take those highs out, the buyers come in and they jump off that moving average. These are a little more difficult because, again, it will feel like this market is reversing here. So if it does pop and really blast higher, don't be afraid to grab that new channel off that high, find that smaller channel there, and then grab that first pullback off the low of that channel. These ones are a little more difficult because, again, you're going to see a lot of these deep pullbacks that look very, very convincing. They have to get back to that moving average. Remember, blast off the EMA. That will give you that turn of momentum. And I know it's tough. Believe me, I want to buy that too. But again, in this context, you can't buy that. You got to wait for it to fail and sell it back down again. So now we've kind of talked about as the market goes higher. And again, if we get that short back down, that's exactly where those two tri-reversals come in, right? Double bottom reversal. 1, 2. This is exactly where that reversal could punch right back up again. And again, where do they want to go? They want to go back up, and they want to take out that high. So this could really be a good sequence for us, here for tomorrow. If we do keep on grinding down, all right, and that could easily happen. We got 95 is the next big round number. Below that, 93, 63 is our next big objective. If the market keeps on grinding down here, don't hesitate to adjust this channel down, move that channel down, find some more swings as we go, and then look for that shallow pullback trap, that deep pullback right when it starts feeling like reversal. That's it. 1, 2, back down. Or maybe it does, maybe the CPI report does shock the markets tomorrow. We grind down, we punch, and we grind higher here. That's your giveaway. That grinder is a very easy giveaway for that reversal as well. So great clues from the crude oil for tomorrow. Again, we did our best tonight to kind of prep the charts, get our mind right for tomorrow, right, as far as the right attitude goes, the right strategy goes. But a lot of this will determine what happens overnight, and of course, a lot of what happens here tomorrow morning at the opening bell. Now, speaking of the opening bell tomorrow in that CPI report at 8:30 Eastern time, tomorrow morning, 8 o'clock Eastern time, we'll get together, we'll prep our charts from overnight, have a front row seat for that CPI report tomorrow. If you're looking for a great place to learn and trade along, if you're missing too many good trades, or you're taking too many losses, or you're like I was when I was a new trader and just anxious every day getting to your desk, I had an emotional roller coaster when I was a new trader. It wasn't until I found a mentor to kind of calm me down, give me a roadmap to follow. Once I had a system to follow, this is many, many years ago, that's when everything became easier for me. So if you need that roadmap, or maybe just need somebody there to kind of show you what goes first, what goes last, I'm going to be there tomorrow morning in the trade room. Love to have you there with me. I'll put all the free course links. Grab the free trading class first, get that going, learn the basics. And of course, I'll put all the trade room links, all the membership links below me tonight for our advanced classes here at School of Trade. Don't be afraid to call the office. I'm always here to help. If you guys have questions along the way, we have live chat on the website, and of course you can always post some comments in the comment section below, although it is faster, of course, to get help by calling me here in the office. All right, guys, as always, thank you so much for tuning in. Thanks for sticking around all the way to the end. Got a big day coming tomorrow, right? How high will the CPI number go? How will the market react? This is definitely something we're looking forward to tomorrow in the trade room, and hopefully I'll see you there right along with us. Now get out of here, get some rest, get a good night's sleep, get a busy tomorrow. Be well, be nice to each other, will ya? And you better be here next time, right? Adios, amigos. Bye-bye for now.